Hi there. August newsletter I thought would be perfect to come to you as a quick little video, a little bit of an economic update for this month and explain a few things. I've had a lot of questions. We've got the markets reacting to talk of the big R, that being recession, and you're going to hear it in the news, in the media. And a lot of people have been asking me about what is an inverted yield curve? What does this mean? Why are the markets up one day, the next day down 200 points, and then up 100 points? And so we're seeing a lot of volatility right now, up and down. And this is a great chance for me to just give you a little bit more knowledge and some of the terms that you might be hearing in the media. So I want to share a little bit on my screen with you. Give me 1 second here while I pull that up. So, trade tensions, yes, we know, we've heard about that. Think the Asian countries, that some of the talks that are going on. We've got US economy still doing well with retail up, but industrial production down. And so retail sales are holding the economy for right now, but let's not forget those trade tensions. So that's part of the up and down that I was talking about in the market. And then we have Canada, yield curve inverted. And I want to share a little bit more about that because that's one of the questions I get is what is an inverted yield curve? And this is a great opportunity. So it's an interest rate environment in which long-term debt is lower yield than the short-term debt of the same credit quality. And so I want to show you a picture of what I'm talking about a little bit more. This is the Bank of Canada government bonds. And so what you can see is that there is a downward trend here. What has made the market so nervous is that there's been a yield curve inversion, which is what this is, that downward trend over time that we can see going down, sometimes spiking into a negative. And if that happens time and time again, then we have a trend. And so there's been a yield curve inversion trend before each of the past 7 recessions. And this is why we're hearing that talk of recession. And this is what an inverted yield curve means, is that week after week, we can see that the trend is going down even more. So next thing I want to talk about here, trade tensions. This is a great cartoon. Notice they're each playing a different game of chess. This explains an escalation in trade tensions. This creates uncertainty, pushing interest rates lower with some volatility in the markets. Less trade equals business hesitation, which creates our GDP growth lower across the globe. Think about it. It's difficult for businesses to plan investment growth and spending when they don't know the rules of the game yet or the cost. So imports, exports, manufacturing is down. They don't know what it's going to actually cost them until these two guys figure it out and come to some sort of agreement. So this is what trade tensions that we're hearing about. This is what this means. We've got a possible recession also heading into Europe. And so here's an example of Germany going into recession. We're pretty sure that they're either there or they're on their way. And so Europe isn't looking great. And that's bringing a little bit of hesitation. But what I want you to know is that life goes on through a European downturn. So think 2012. If there's another European recession, back in 2012, we didn't experience it here. Remember, consumer staples are still needed. We're still spending over here in North America. Services are still in demand. We still need to purchase household items. We're getting our hair cut. We're buying things online. We're spending money. The US economy is resilient right now. We'll see where that goes, but because of consumer consumption. And so what I mean is that if we look over here at retail sales, this is the US as an example. Retail sales, this bar, it's high. Think Amazon. Last month, Amazon alone was the reason of this being positive and this high, is because they've got amazing sales right now. They brought, actually, that one company brought the US economy up for retail sales. So also mortgages are up in the US, and so there was a high number of home purchases. So that's a good part. If you were to think of the US consumers as a country, it would be the largest country in the world. So bottom line is that we're still spending. Now, probably spending too much because of our debt levels, but the spending is what's keep carrying the economy right now. And so there is that brink of recession, but right now retail sales is bringing that up. This flip side, now this is on the other side though, industrial production and manufacturing over here, we see it's actually negative. This is what's going to hurt North American economies. This is what's going to bring a drag into our growth over here in the US and Canada. Deacceleration and contraction in industrial production is going to hurt. Again, it's because of the trade fights. Manufacturing is slowing down. Remember, I said companies aren't spending the money. They don't know the rules yet. They don't know the cost, so things are slow. One of the other questions I get is Bank of Canada interest rates, so come September. That's speculation. We have no idea where that's going to go, but we can say that because of the inverted curve that I showed you of what an inverted yield curve is and all the indicators, probably interest rates won't go up in the fall. There's talk of maybe them going down. We'll see. Doesn't matter. It just means that financial sectors possibly could be hurting in the future. That's less profit to the banks, and we'll see where interest rates go because of that. So what does this all mean for you? Well, whether or not we have recession, that big R word, there'll be slower growth environment for us. Your accounts are doing well up to date. However, this explains why we won't be seeing the leaps and bounds that we saw in the first half of the year. It's the perfect time to stay diligent. It's to stay the course, everything that you've heard me say before. No matter the predictions of the remainder of the year, we must avoid the market noise and stick to our proven investment approach and allocation. We know it works. You're with the most elite fund managers. We have great track record, and we're doing all the right things. So I know, like a broken record, every time you hear me talk or what you read is stay the course. So that's our economic update, hoping to give you just a little bit more information and knowledge. When you hear something in the news, you can kind of drown out the noise now. You've got a little sense of what they're talking about. If you have any questions, give me a call here at the office, and our door is open to talk anytime. Thanks.